Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Blackberry. I'm going to go over a summary of the company, its product offerings, recent headline news, the short squeeze situation, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term day traders and long-term growth investors. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations. So let's get right into it. So Blackberry provides security software and services to enterprises and governments. The company leverages artificial intelligence and machine learning to deliver solutions in the areas of cybersecurity, safety and data privacy, and offers endpoint security management, encryption, and embedded systems. Its products and services are structured in three groups: Blackberry Spark, Blackberry Internet of Things, and Blackberry IP licensing. So as you can see there, folks, they're no longer the fledgling 90s phone company of yesterday. So let's look at some news of the company right now, what's going on with them. So Blackberry is going big with Baidu. That's the Chinese rival to Google. On Monday, Blackberry said that Baidu's high-definition mapping technology for vehicles will run on the company's QNX Neutrino real-time operating system. Specifically, the tech will head to Guangzhou Automobile Group, and future electric vehicles from the company will feature the Blackberry Baidu technology. I think that is great news. So now let's look at some of the fundamentals of the company right now. So it's currently trading at $11.80 a share. It definitely was, this is the whole short squeeze situation right now, and it's definitely took a nosedive bath. So it kind of, the January 27th had a high of $20. But yeah, today it just went from around the right below the $15 a share mark all the way to $11 a share. And the current market capitalization is around $8.25 billion. Now, the company is unprofitable and is not forecasted to be profitable over the next 3 years. The current forecasted revenue over the past 12 months is projected to be about $943 million, with a negative $811 million in earnings. Let's bring it back here. So yes, that does sound bad, but the balance sheet looks good though, and even though Blackberry has been unprofitable, Blackberry has sufficient cash runway for more than 3 years if it maintains its current positive free cash flow levels. Now, this isn't your AMC or GameStop stock that really has potential to go bankrupt. There is no real scary potential for Blackberry over the next few years to actually go bankrupt, folks. So it's not going anywhere. The forecasted revenues in 2023 will be around $1.05 billion, with an earnings of negative $77 million, which significantly improves their overall current condition if they keep on their current track. So if you only look at the historical revenue and earnings data since 2015, you might freak out and say, well, look at the revenues were $6.8 billion in 2014 with negative earnings of $5.87 billion. Yeah, that kind of looked like they were in a hole there. But you must look deeper into Blackberry to understand their core lines of businesses, where it's at today, and the future outlook tomorrow. So what do the analysts say right now? Well, the consensus of the analysts right now is a moderate sell, and they just updated that. The average Blackberry stock price target is $8.10, with a high estimate of $8.50 and a low estimate of $7.50. And folks, that is over the next 12 months. So going over a few analyst reports themselves. Now, the analyst reports have updated themselves over the past 3 days because this is a hot stock to talk about right now. And all of them, most of them have a sell recommendation on this company at this exact moment in time, with those share prices going crazy. The Forward Equity Research team has a hold though, and I'll review that report real quick. Now, Forward's hold recommendation on Blackberry is the result of their systematic analysis on their 3 basic characteristics: earnings strength, relative valuation, and recent price movement. The company has suffered a very negative trend in earnings per share over the past 5 quarters, and while recent estimates for the company have remained steady, Blackberry has posted better than expected results. Based on operating earnings yield, the company is about fairly valued when it's compared to all the other companies they cover. Share price changes over the past year indicates that Blackberry will perform very poorly over the near term. So let's look at the valuation, profitability, growth, financial strength analysts. Before that, well, they basically said that it's fairly valued, but there's going to be a significant negative impact on the stock price over the near term, which I'm thinking it's going to get down to below the $8 to even about $7 a share price. Now, looking at the valuation analysis, the most appropriate valuation analysis for Blackberry is the price to sales ratio. The price to book ratio is excluded because it most likely underestimates the company's book value by overlooking hidden assets such as the intellectual property, while the PE and the PEG ratios are not meaningful at this point right now. Therefore, BlackBerry seems fairly valued with a price to sales ratio of 9.47 times, and that is in line with the software industry median of 6.89 times. It's a little over that, but they say it's fairly valued. I think it's a little overvalued at $11 a share, but I'll get into that. Now, the profitability analysis, losing money on an operating basis, BlackBerry appears to be an inefficient company. While its profitability is above the median on a gross margin basis, its bottom line, the net margin, is below the software industry median. How about the growth rates analysis? Trailing 12 months earnings at BlackBerry declined at a greater rate than revenues. Additionally, the average company in the software industry was able to improve its earnings result over the same period. Now, looking at the financial strength analysis, BlackBerry's debt to total capital ratio at 20.29% is in line with the software industry's norm despite the increase over the last year. The company may have difficulty making interest payments. Its interest coverage ratio is 127 times. It is among the highest in the industry, but shows that earnings from day-to-day activities are too small to service the debt. So my buy, hold, or sell recommendation on BlackBerry right now, here are my thoughts. Since this stock is mixed up with the Wall Street Bet Forum's attack on short sellers, if you are a long-term growth investor, I would recommend staying out on the sidelines while they fight it out over the next few weeks or days. The fair market value price of the stock is below $8 a share, so I would avoid this one at all costs right now. BlackBerry is not a bad company for tech investors to consider adding to the portfolios, though. The company provides endpoint security software, services laptops, cars, mobiles, and other Internet of Things devices. However, experienced long-term investors know that it is important to buy stocks at the right price point. So target about $5 to $7 a share in the end and hold for a few years would be my recommendation for long-term growth investors. But BlackBerry does have some downside risk though in the future if the valuation models turn against BlackBerry and they do not become profitable over the next 3 years. I think it would take about 6 to 10 years for BlackBerry to cross the $30 per share price and maintain it. For short-term investors who are betting on another upswing in the stock price, I am not here to give my predictions on that, but here's my view for the short-term investors. Have fun with it, but remember, in the end, it will only be trading at or near fair market value when all is said and done. So I would recommend sell, get out, take your profits, and run out to another stock. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations. Until the next stock update later today, folks, ciao.